Okay, now see, it is saying on 1st April 2017, Sonu Limited purchased a machinery for rupees 3,90,000, on which they spent rupees 5,000 for carriage, rupees 2,000 for brokerage of the middleman, rupees 2,500 for installation, and rupees 500 for an iron pad. On 1st November 2018, they purchased another machinery for rupees 1 lakh and immediately spent rupees 20,000 on its overhauling. So on 30th September 2019, the machinery purchased in 17 was sold at a loss of rupees 1,27,800. Now you can note that this time you have not been given for what amount you are selling the machinery. You have been given the loss. So then you have to find out the bank amount, that for what amount we have sold that. The company charges depreciation at the rate of 10% per annum on written down value basis. So written down value basis means that it is written down value method for charging depreciation. You can say it is diminishing balance method or reducing balance method also. Accounts are closed on 31st March every year. So now see this question. We will start it from the year 2017. Okay. So the purchasing date is April 1. To bank account, and the amount of purchase is 3,90,000. Then we have incurred certain expenses. For that also we will make the same entry, because these are the expenditures incurred on any fixed asset, and that's why it will become part of the cost of the fixed asset. So now the combined expenditure has been done 5,000 plus 2,000 7,000 plus 2,500 9,500 and plus 500. It will be total 10,000. So here in bracket we can write these all amounts. 5,000 plus 2,000 plus 2,500 plus 500. So now the total cost of this machinery will become 4 lakh. Now this is the year 1718. So you can also note that 1st November 2018 will be a date in next financial year 1819. It will not be a part of this year, and that's why we will not record this transaction here. So we have only one transaction in this year. So we will go to March 2018 and we will charge the depreciation. March 31st by depreciation account. Now again we will show the working note and we will show the calculation of depreciation. Depreciation on machinery purchased on April 1, 2017. April 1, 2017. So the cost is 4 lakh now. 4 lakh multiplied by rate of depreciation. So rate of depreciation is 10% per annum. 10 upon 100. Now we have to think about the time. So for time, you can see that April 1 to March 31st. April 1 to March 31st, this is the time. So that's why we will be charging depreciation for one complete year. And for 1 year, its depreciation will be then 40,000. So depreciation will be 40,000. Then by balance carried down, the total will be 4 lakh. And from 4 lakh, we will subtract 40,000. So the balance will be 3,60,000. Now in 2018, April 1st, we will note down the balance. To balance brought down 3,60,000. Now we have to identify the transactions done in 2018-19. So this is the transaction given here. 1st November 2018, they purchased another machinery for rupees 1 lakh. So the date is November 1. To bank account and the amount is 1 lakh. Then here also we have incurred some expenditure on its overhauling, 20,000. So to bank account again. And we have incurred an expenditure of 20,000. So the total cost of this machinery will be 1,20,000. Now in 2018-19, is there any more transaction? on 30th September 2019. So 30th September 2019 will be after 31st March 2019. So this is next year transaction again. March 31st. Again we will be charging the depreciation by depreciation account. And because now we have two machineries, so we will be calculating depreciation on these two machineries separately. Okay. Now first we will calculate, and the method is written down value method. So the new written down value for this first machine is 3,60,000. So we will calculate it depreciation it here. 3,60,000 multiplied by 10%. For 1 year it will be 36,000. So for first machinery the depreciation will be 36,000. Now we have to calculate the depreciation for another machine. Second, depreciation on machinery. Purchased on November 1, 2018. Cost is 1,20,000. Rate of depreciation is 10%. Now we have to count the time. Time is November 1 to March 31st. So November, December, January, February and March. It will be 5 months. So time will be 5/12. Now we will solve it. It will become 10, 1/10 and 12,000. So 12,000 multiplied by 5/12, and that's why it will become 5,000. So the depreciation here will be 5,000. And the total depreciation charge will be 41,000. Now we can calculate the balances. March 31. Buy balance. Carry it down. And second machine. So first machine balance will be 3,60,000 minus 36,000. So 3,60,000 minus 3,30, 3,24,000. And second machinery, it will be 1,20,000 minus 5, 1,15,000. So 3,24,000 minus plus 1,15,000. So it will be 329, 339, 4,39,000. Now we can total both the sides. First I should remove this. So this side total will be 4,80,000. 4,80,000. 439 plus 1, 440 plus 4. It will also be 4,80,000. Now we will come into the third year, 2018-19. Sorry, 2019-20. And we will first write the opening balances. April 1 to balance brought down. First machine and second machine. So now the balances will be same as closing balances. Now see the transactions given in 2019-20. On 30th September 2019, the machinery purchased in 2017 was sold at a loss of rupees 1,27,800. So on 30th September 2019 you are selling. So first entry will be on 30th September, or you can write it September 30 by bank account, and we have to calculate this amount. Then loss has been given by depreciation. Obviously we have used this machinery for some part of this year, so we will be charging some depreciation on this machinery, and loss amount has been given by statement of profit and loss. This is given 1,27,800 in the question. So we will again prepare working note. First thing, we can calculate the depreciation of this part. So the written down value in the beginning of the year was 3,24,000. 3,24,000 multiplied by 10% multiplied by time. Now count the time from April 1 to 30th September, and it will be 6 months. So for 6 months we have to calculate the depreciation this time. So it will be 32,400 divided by 2, and it will be 16,200. So this depreciation will be 16,200. And if you want to calculate the bank amount out of this opening balance, also you can deduct these amounts. You will automatically get the bank amount. But we will always prefer to prepare the proper working note. Calculation of sale price of machinery. We will show it properly. So original cost of plant on April 1, 2017. It was 4 lakh. Then depreciation charge in 17, 18, 18, 19 and 19, 20. So first year depreciation was 40,000. Second year depreciation was 36,000. And third year depreciation has been calculated as 16,200. So the total amount of depreciation charged is 36 plus 6, 42 plus 10, 52,290. 30, 42, 52, 92,200. 92,200. So the written down value on September 30, 2019. Yes, this value will be 4 lakh minus 90, 3 lakh 10,000, 3 lakh 8,000, 3 lakh 7,800, 3 lakh 7,800. Now written down value of plant as on September 30, 2019. It is 3 lakh 7,800. Loss on sale of plant is 1 lakh 27,800. So obviously if we will add these two, we will get the out of this 3 lakh 7,800, we will deduct this 1 lakh 27,800. So 3 lakh 7,800 minus 800, it will be 3 lakh 7,000. Sorry, yes, 3 lakh 7,000, then 7,000, 3 lakh, 2 lakh 80, 1 lakh 80,000. So the bank amount will be 1 lakh 80,000. Instead of writing plant, please change the word machinery. So the bank amount will be 1 lakh 80,000. You can also write here working note number 3. Working note number 3. So this will give a reference that in which working note number you have shown this calculation. So this plant has been sold and it has been recorded. Now see whether any other transaction is there. So no other transaction is there. So we will calculate depreciation in 31st March 2020. March 31 by depreciation account. Only one plant is there now. This one. The written down value was 1,15,000 multiplied by 10%. So it will be 11,500. 11,500, yes. Because the plant has been used for one complete year. Now we will calculate the balance by balance carried down. For that, now the balance will be 1,15,000 minus 11,500. So 1,04,000, 1,03,500. And then total will be there for both sides. We will do totaling here. So total will be 4,39,000. And we can sum up these all. So this will also come for 39,000. Then we will write the opening balance in the 2020 year, April 1, and this way our question will get complete. So now I hope you all are almost clear about each and everything regarding these questions. How to present your answers, how to calculate the amounts, how to do calculations, how to write the entries. But it needs a lot of practice, regular practice. So please solve your questions, do proper practice for each and every entry, for each and every minute thing.